All right, everyone. Hello, 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 Lucas. And
Hi, Julian. How's it going?
it's going great. By the way, we talked a few seconds ago about indexes in US. And next week, I mean, Tuesday and Wednesday, there will be two big events in US. I mean, CPI index and interest rates. And we'll be playing according to these indexes. Also, yesterday was PPI, so I mean, producer price index event. And Bitcoin didn't respond in big volatility yesterday, but I mean, I believe that on a Tuesday and especially on Wednesday, there might be much bigger volatility, according to what Federal Reserve in US will decide. Are we going to increase interest rates above 50 basis points, or maybe lower, or even maybe higher, or 0.75 basis points? And BTC will be reacting to this. BTC will be reacting, will be playing, basically in max data. Yeah, we already coded an algorithm which are scrapping data from US government site in real time. And yesterday and in the previous months, we had this data first time, but much earlier than in any other tools across the internet. I mean, any other calendar.
Can you show how to access it? I would love to read it actually at one place.
Yeah, of course. You have to join our Telegram, and it's open chat on our Telegram. And when you go to Max Data, app, it's you will be directed to the Telegram. It's first biggest Telegram, and tomorrow, and I mean on Tuesday and on Wednesday, there will be alerts directly from US government sites. And because of that, we are scraping US government sites directly. We had such info in milliseconds after its live, in milliseconds.
And do you trade? I think those moments are very volatile, right? When the data is being published. I remember it was in September, right? The previous numbers, and it was
we can check it on our tools.
Yeah, so maybe if if you short-term trader, if you're prepared, you kind of can have some.
Yeah, I can show it to you.
Sure.
So I will share my screen right now. And yeah, and we are on max data right now. So here on the right corner, load charts and just history. And we are putting some events which happened previously. For example, this this direct moment right here was yesterday event, the producer price index event, and the price changed around 0.5%, maybe even 1% in just 1 minute. So it was pretty big volatility, but not as big as for example, interest rates or CPI. Previously, for example, I will show you 15 minutes interval. Okay, so here CPI, last CPI, and such volatility like 8%, 10% in just 1 hour. Basically, look at this. And I was playing on this. I was putting my capital here, my money, and because of that, we had tools prepared already, which alert us directly, just in a milliseconds after the US government showed that. Because of that, I was able to buy BTC at these levels. It was just seconds after it occurred. I will show you. Far away from this point.
It's important that users, understand how to interpret data, right? If let's say the data, is more you know, if the interest rates are higher or lower than expected, what happens? What kind of implication does it have to the market, right? I think you have to really have that knowledge in place if you want to play along.
Let's start for interest rates. What are interest rates? So interest rates is something which is taking the supply of dollar out from the market. So there are amount dollars of the market, and when Fed is hiking interest rates, so basically Fed is saying, give us our dollars back, give more dollars back to us, to Fed. When Fed is saying lower interest rates, it means, okay, you can keep our dollars and you can play on it. So where there is more dollars on the market, the dollar is cost less because there are more dollars on the market. Where the less dollars on the market, so higher interest rates, so dollar going up. And in opposite, when dollar is going up, the BTC is going down because people have to pay their loans back. When the interest rates are higher, people have to get their dollars back. What they are doing, they are selling their assets to pay back their loans, to pay back them. So they are selling BTC, Bitcoins, they are selling different assets. And because of that, the market, for example, the dollar is going up and the BTC is going down. And interest rates are the most important indicator right now. So Fed decision about increasing interest rates. That decision right here last month was at this point 0.75 basis points, and the market reacted as it probably should react, maybe from this level around 20,000 to this level. But we have to remember, of course, that summer here was FTX collapse, and FTX also made it happen that the whole market went terribly down. Without FTX, probably the market, the BTC market will be still around these levels of $20,000. Previously, also Fed hiking or lowering interest rates. Here, hiking interest rates. Here, as predicted, 0.75. Here, and many times before. Here, interest rates. So big volatility right at the moments of showing that decision. And what is CPI and what is PPI and what are other indicators? So, for example, CPI is one of the most important because CPI is Consumer Price Index. Consumer Price Index is basically showing how big is inflation in US. This is a Consumer Price Index, this line right here. And if inflation is big enough, the Fed will not hike interest rates. The Fed will have to hike interest rates faster if inflation is big enough. If inflation is going lower, if inflation is stopping going high, the interest rates will not be tightening so fast. And because of that, we are following this kind of data in real time. For example, PPI, CPI, and on Tuesday there will be SOPR, so Consumer Price Index decision. What is Consumer Price Index at the past month? If the Consumer Price Index will be higher than predictions, the BTC probably will go down because investors will be preparing for that a more expensive dollar on the market, because when inflation will be higher, Fed will have to tighten interest rates, and because of that, BTC down and the dollar up. On the opposite side, inflation lower than predictions and BTC up. That's why we are aggregating this kind of data in real time, directly, not from just some calendars, not from some websites, but directly from government sites of US. And because of that, we are able to process this data as fast as is possible. And the next event will be on Tuesday.
So I see that next week you're definitely trading, right? You're definitely setting up trades.
Definitely. Maybe, you know, I'm not trading in a way many people trade. Every day, you know, have to trade and have to do many moves every single day. We have to remember every move on every trade cost around 0.1% probably, 0.1%. So, for example, if you are trading every single day, and you, for example, gain +1% today, and tomorrow you will gain another +1%, and the next day after you will gain another +1%. So 3 days in a row, and 4 and 5, 6 and 7. So 7 days in a row you will gain 1%, only 1%. So how big profit you will get after a week?
So it's depending on commission, right? Depending on how much commission you pay.
Without the commission, right now, without a commission, right now on the profit.
Mm-hmm. Oh, so if it's compounded, so it's above 7%, right?
No, 10%.
Mm-hmm.
Not 7, and because this.
Sure. So that's what I said. It's above 7.
10% after 7 days. Mm-hmm. But in the same way, you have to understand that if you are paying every single day, if you are doing one trade every single day, only one trade, and each trade costs you 0.1%. All right. So after 7 days, again, you will get -1% after 7 days. So if anyone is trading every single day, he has to understand that every trade costs. That's why I'm not trying to trade, for example, often. I try to trade as less as it's necessary, and only then when I have pretty big possibility to win, because every trade is cost. And basically, we don't know when the market will go. We can, even though we can analyze some events, some kind of data, which can help us to predict the direction sometimes, but not always, but only sometimes. For example, FTX event, when a CEO of Binance tweeted about FTT dump on the exchanges. Just before that, just before FTX halted withdrawals, just before CZ tweeted about FTX, there was pretty big inflow of BTC to spot exchanges. I showed it to you last time. Mm-hmm. So it was right here at this point, pretty big inflow to spot exchanges of BTC. And that kind of events, for example, here, fundamental data, and here, on-chain data, which are telling us there probably will be big down pressure on the market. That kind of data can help us get gain on the market. But most of the time, we are not able to predict that little pumps, little dumps, moving up or moving down. Most of the times, but sometimes when there are some events like this event, CPI in August, and here was also a pretty big flow between exchanges. For example, I don't know if you know that just before they decided what is consumer price index in US August, there was big flow between derivatives and spot exchanges on centralized exchanges. And I will show you. It was right here, just before there was info about CPI in August, just here. So sometimes there are signals from the market, and sometimes we can use that signals. But most of the time, I'm just waiting for such signals. Waiting, and analyzing, just observing. And this CPI was right here, right at this point. Yeah.
And essentially, you know, when you know this data, when you know, let's say, the indexes, you can understand why the things happen as they happen, right?
Yeah.
Why, you know, in the short term, why the price is going down or why it's going up. You know, what I say is that usually those candlesticks, they move in random directions. If you look at a few minute candles, right? But sometimes, like for example, this one that you're showing right now, you could understand, you know, there was a reason behind it, right? And when you know this data, you understand why sometimes the price moves a bit down or a bit up. Now, if you know how to use this and, you know, to your advantage, and you're on a lucky side.
Yeah, basically, yes. We always looking for the reason of pump or dump, or going up or going down. Most of the times, the reason comes from a US macroeconomy. Also, most of the times, it can be seen on-chain data, on-chain metrics. And yeah, and sometimes we can use it. Probably a few times a month, a week, we can use it. Like this, like here. Did I show it to you last time? This indicator?
I don't remember actually, but what is this one?
Yeah, it's pretty interesting. You know, many people on the market in the crypto industry, including some of my friends, are pretty sure that BTC will go to around $13,000. Yeah, $13,000, there is big support area. And why $13,000? Why especially 13,100? Because of the top from the June 2019, right here. Here is around 13,700, 800, something like this. And because of that, many traders believe that BTC has to go to this level. But this indicator is showing something really interesting. What is it? This indicator is showing the BTC correlation, but BTC ratio with S&P 500. S&P 500 is this pink one. And this indicator is not only BTC to USD, but this is BTC to S&P 500 ratio, all right? And that's why these levels are different right here, for example, than from traditional BTC price. And again, if we will analyze this level, this bottom from the July 2021, we will notice that it was just at the level of support area from 2017, the top. And for example, BTC price, if we will analyze only BTC price, we will notice that right here, it wasn't any kind of special support zone. There was this big difference between this price and this price, but real value of BTC from 2021 and 2017 was the same at these levels, and because of that, it was pretty big and impactful resistance zone, a support zone. And here, right now, at this point, right now, on a weekly interval, right now, we just hit the support area from 2019 at these levels. And so basically, BTC probably value of BTC, real value of BTC is something around this levels from 2019, and we just hit that resistance, that support zone, which many traders believe that we will hit in the future. Of course, this is not an advice to anyone. It just analysis. Also, what is interesting that, for example, if we look at the Nasdaq, similar to Nasdaq, BTC to Nasdaq, BTC to Nasdaq, pretty similar. If we compare it to dollar purchasing power, it's not as similar as an S&P 500. If we compare it to CPI, only CPI, so inflation in US, look at this supports from 2017 and 2022 right now, big support zones. Interesting fact is also that what are big players saying? Huobi, for example. Did you read this article, this research from Huobi last
no,
week?
I haven't. What does it say?
It's pretty big article, as you can see, many kind of data, but at the beginning, what they are noticing, what they are pointing, finally, we make some forecasting for the industry in 2023. First, the market will reach the bottom in early 2023. In early 2023, okay, great. Huobi is a big player. It's a seventh, the biggest centralized exchange in the crypto industry. Great. So beginning of 2023, and why? Why beginning of 2023? What this man, CEO of JP Morgan, is saying about inflation. I will show it to you.
And their balance sheet, consumer balance sheet is in great shape. The other news, which is not good, is that rates are now, 4% on their way to 5%. Inflation is eroding everything I just said, and that $1.5 trillion will run out sometime mid-year next year. And so when you're looking out forward, those things may very well derail the economy and cause this mild or hard recession that people are worried about. But far more important than that, by the way, is all the geopolitical stuff.
It's a big decision. Wait, you said 5%. You said 5%. You really think that's where rates are going to stop? The terminal rate?
I think the Fed has made it clear they're going to get to 5 and stop for a while. I read a while as 3 to 6 months. That may not be sufficient.
3 to 6 months, but he believes, the CEO of JP Morgan believes that interest rates will go to around 5%. So right now we are at 4%, and he believes that we are going to 5%, and then we will stop for a while. Then we will stop for a while, for around 3 to 6 months. So take this. Right now we are facing probably another increase of interest rates next couple of months, maybe this month, next month, and another month. So maybe this one 50 basis points, another one 0.25, another one in February 0.25 again. And after 3 months, so after around maybe 19 days, yeah, like this, maybe after these 3 months, we will stop for a while and wait how the inflation will react. So maybe in another 3 to 6 months, the Fed will be just observing the market and just trying to understand, is it necessary to increase interest rates more or maybe not. And because of that, this 3 to 6 months might be real relief for the market, for whole market, for BTC players also, and of course S&P, etc., Dow Jones, etc. But still, we are facing around maybe 3 months when Fed will be still hiking some interest rates. But then, if there will be decision that on the next meeting, the hike is no hike, around 0%, the market will feel relief. maybe it will be nice time for a little rally in the BTC. I don't know how big, so I don't take it directly. Yeah, just this moments between March and October and September, maybe 2023. Maybe it would be nice time for a micro bull run or a big bull run. I don't know. All right, and what is your opinion on this? I'm talking.
That's super cool. So just to finalize your points, right? So you kind of agree with Huobi, right? That we may see a new low in the early 2023, and then we're probably going to go into some relief rally. Is that correct?
You know, maybe yes, maybe I believe that. Of course, I will be analyzing data at the real time, but right now I can believe it if there will be stopping with tightening interest rates for around 3 months. So then yes, from interest rates from Federal Reserve. Do you want to show me something? You want to
Yeah, sure. That's a very interesting perspective. You know, I would like to present a different perspective, but the kind of very similar results that align with yours, right? Nice. So I just would like to start with the question: how do you feel about the market right now? Like, you know, I like to kind of start a day and open this graph, and how do I feel right now? Not considering any kind of technical indicators. Right? How do I feel? Do I feel a panic today? Do I feel like that I capitulated? You know,
Not
when
panic,
I see my portfolio,
panic.
I feel angry, or I'm euphoric already, and you know, I'm in kind of a optimism. What about you? What would you say?
Maybe I'm not talking about me. I'm talking about the market because I don't feel such feelings. Maybe something between panic and capitulation. Maybe capitulation.
Yeah. So I certainly, you know, when I woke up today and I opened this graph, I really thought it somewhere in between capitulation and agony, right? Somewhere around that. Somewhere I feel that we most probably capitulated. We had such a big crash, right? But are we done? Yeah, maybe. I mean, depression. I mean, personally, I don't feel that, right? But is the market depressed? Kind of, right? But somewhere around that line, somewhere along those lines. So now nobody knows where exactly, and we kind of trying either to predict or forecast and think about that. So coming back to the graphs that I wanted to show for today is actually the cycles, right? And the cycles kind of aligned very well with what you presented with the CPI data and other kind of information, right? I mean, they're showing same price movements, but based on totally different perspective. So last time when we spoke, I kind of presented this 4-year cycle, and I guess the potential bottoms. I analyzed the bottom of 2014, then we spoke about 2018, and we kind of discussed where this potential bottom could happen, right? Now, Bitcoin has those 4-year cycles, and everybody knows about them. But what many people don't know is that Bitcoin also has 60-day cycles. Now, as stocks, they also have their own cycles. Bitcoin has its own 60-day cycles. And I will quickly would like to explain now how they work, and actually counting them this bull run, and want to quickly show you how, you know, how to analyze them, how I analyze the cycles. So if we start with let's start with the COVID crash, right? When prices started to rally up. So 60-day cycles work in a very kind of a simple way, right? We always see a bottom, some kind of a bottom formation every 60 days. So if we start from here, from COVID, that's definitely a bottom, right? I mean, we definitely started before, but let's, for simplicity's sake, start right here. Now, after 60 days, we see some kind of a dump, right? So there was always at least a few percentage dump. Now, in this situation, it was not a few percent, it was 15%. So we always see some kind of a dump at the end of the 60 days. Now, it can be between 52 to 70 days, usually, in some extreme cases, even more than that, but more or less, it's about 60, right? Same here. We always see some top, and then after 60 or so days, we always go down a little bit, right? Again, same here. We see some top, and we see some downside after 64 days. And let's say go from bottom to bottom. Now here is an extreme case. It's a 78 days after the previous cycle low. That means that we are in an extreme bullish situation, right? So let's just go to and check every bottom, and then we'll come back to that. So again, after that, we have the bottom after 56 days, 61, 58, 57, right? So as you can see, this has a lot of meaning, right? And the meaning is that after every 60 days, more or less, you always see some kind of a downside. And you can, if you aim it right, you can buy Bitcoin for a very good price. Now, what about the tops? What about the red circles there? Now that's a different topic. Okay, so what do we have on the top of that? So let's come back to the March 2020. Okay, when we want to guess or when we want to forecast the next 60-day bottom, we always have to see what happened after 30 days. Did we have a top after 30 days? Oh, sorry, or not? So for example, here was 60-day bottom. From here on, we go to the right for 30 bars. That's somewhere around there where I put the black bar. Now that's the midpoint. So if the top occurred on the right side of the midpoint, we are having a bullish cycle. And if the top occurred on the left side from the midpoint, we're most probably having a bearish cycle. Now, it's not so easy as it sounds. So for example, in some situations, you don't know because you're maybe somewhere around here, right? So maybe just 30 days just passed, but you don't know if in this 60-day cycles, we're already past the high point or not. And that's the problem, right? So it's very easy to analyze cycles in hindsight, and it's much more complicated to estimate or to forecast something. However, there are some scenarios where you can do that, and we're going to come back to the current price prediction forecast very soon. Now, here we can clearly see that the midpoint occurred after that, that the high occurred after the midpoint, and that means a bullish cycle. A bullish cycle means that the low is superior to the previous low, right? So the previous low was here. The next low is here, up 86%, right? And you can go on and on and on and see that, right? For example, here, the midpoint occurred after 22 days. Sorry, the high point occurred after 22 days. That means that this cycle is not the bullish cycle. We cannot expect too much of the cycle. And the price stayed at more or less similar level to the previous bottom. Now, again, we go to the right. We see that the midpoint here occurred after 41 days. Okay, bullish cycle, right? We're in a bullish cycle right now. So the bottom occurred after right here, basically a higher bottom. We had a higher bottom, and we go right there. So if you see more bullish 60-day cycles, you can expect price to raise in the medium to long term, and that's what we see. We see a huge bull run, and especially this 60-day cycle showed you that something is erupting, right? We had 78 days cycle here. So the top occurred after 74 days, which is totally crazy. So if you are somewhere around here, the cycle theory tells you that now it's a great time to buy. And that's exactly what we saw. We saw another eruption from 16K to about 64K. Same as here, right? The cycle top occurred 43 days before the previous cycle low. It's a bullish pattern, bullish cycle, meaning that, again, it's a great time to buy, and that's what we see. Now, let's come back to the recent times, and let's see price formation in the previous few cycles, okay? Now, bearish momentum, somewhere around January 2022, okay? Let's assume we are somewhere here. We see the top of the cycle after 14 days, which means that before the midpoint, okay? Which means a bearish cycle. However, we had we didn't form a lower low. We formed a higher low. Again, if you see that, that's probably a pattern, or that's something that the market's saying to you that we are not in a bull market just now. Again, a bearish cycle, and price started to go down once again. Same here, 18 days, less than 30, we are going down, and so on, and so on, and so on. The previous two were very interesting, actually. It was very clear that we will be going down. So actually on my Twitter, somewhere along there, I published a post saying that we will see a further downside. Although many people were, that was just before the FTX scandal. Many people were guessing that that's it. We're at the bottom. It's time to buy right now. But it was very clear when we had this failed cycle, right? So we started rallying up. We formed a new high. And then before the midpoint, we didn't actually even went to that price, right? So the midpoint was over here, and it was clear that we are going down, that we will most probably gonna form a lower bottom in the next cycle, and that's what happened. We formed a lower bottom right here, okay? And that actually aligns with what you, Julian, suggested, right? Where we had the CPI data, right? And from this, the price really collapsed down by around 18%, right? And now we are here, right? That's essentially the last cycle of the 4-year cycle. So everybody agrees right now that we're somewhere very close to the bottom. Whether the bottom is there or not, you know, it's not up to me to guess. However, We are in the last 60-day cycle of this 4-year cycle. So yes, it is a great time to buy. Can we go lower? Yes, definitely we can. And essentially what I try to represent with this pink box is that we can go anywhere below 8K and here 16K to really finish this 60-day cycle. Now the midpoint will happen tomorrow, right? And we didn't see much of an upside. Now the biggest upside was here, 12%. So if we don't manage to rally up within 1 or 2 days, which I don't believe, we will most probably test the new lows, or at least we will stay at the same price. So for this reason, just using the cycle theory, I'm not buying Bitcoin, I'm not buying cryptocurrencies like crazy right now. Yes, I have some exposure, but I believe that the next 60-day low, which is planned to happen in the first week of January, somewhere around 6th of January, will most probably either be the bottom or will be the confirmation that the bottom is there, or will even file a new cycle low. And if a new cycle low is filed somewhere between, we don't know, maybe 16, maybe 8K, that will most probably be a great time to buy for me personally. So what I'm doing, I'm waiting for this low in the first week of January and I'm buying then. So the thing is that I'm not kind of following news. I'm not following CPI indexes that much. I'm of course checking out what's happening in the market, but I'm not basing my trading decisions on that. I'm really focusing on checking the cycles, checking the cycle low and cycle high. And we know that Bitcoin is moving into 4-year cycles, and if we observe them correctly, we see that now we're really kind of that reversal pattern where we are going to reverse to the bullish side. So that's essentially how I trade and how I look at the market. Now, I don't trade too much manually, to be honest. I tend to use automation trading solutions. So, for example, what I'm using Rosy Whale, and I don't need to trade manually because, first of all, I don't want to spend too much time on doing that. And second, I believe that if you have a great software, if you can use a great software that is doing for you, if you can DCA while going down, if you could sell while going up, I'm good with that. I'm good with that. And whenever I have to, whenever I want to take even more profits, or whenever I'm sure that we're in a kind of a cycle low, then I'm doing a manual trades myself. So
how it's working, how Rosy Whale works?
So essentially quite simple, right? So people have to log in there, register there, and they have to select an exchange. So for example, at the moment, Rosy supports Binance, US, Binance.com, Huobi, BitGet, and Bitmart. And essentially people have to connect their spot account API keys. So let's say you go to Binance.com, you create API keys and you put them there. And that's it, the automation starts.
All right, so basically you are doing a whole automation, not the user.
Exactly. So the user has to do nothing. And as you can see, the user has no settings except, exporting CSV and essentially seeing the information, what happens on the front end. But the whole trading is performed by the machine.
And, yeah. And how big fee are you taking, if the Rosy Whale is taking?
So the fee is 0.2% per trade. So let's say if as we discussed before, if a user is paying 0.1 for the exchange, is paying 0.2 for Rosy Whale.
Can you tell a little bit about how the algorithm works? What kind of data it's analyzing?
Sure, exactly. So actually, there are quite good Medium articles that I recommend people to check it out. Where, let's say, there are more better description about Rosy Whale. But essentially, what it's doing, right? How the algorithm works is that Rosy will invest in the top 30 cryptocurrencies, right? Now, if the currency falls below top 30, it's usually sold, and the one that comes up to top 30 is being bought. Now, but again, Rosy Whale doesn't invest your whole capital. So let's say whenever a user connects his or her account with Rosy Whale, you only invest about 10% of your capital. Why is that? Because you don't know whether the market is going up or down. And if the market is going down, right, Rosy Whale starts buying and kind of a DCAing into the currencies, right? However, it has this risk management techniques that it doesn't allow you to overexpose to an asset. So let's say what we saw with Luna crash in May, if you use an automation tool like Rosy Whale, yes, your portfolio will be affected, but it will not be by 100% affected. Your Luna portfolio, maybe it's about 1%, less than 1% of your whole portfolio. So sure, you will gonna bleed a little bit, but if you're manually exposed to it, that would be totally different, right? And whenever we see some upside, Rosy selling while going up, right? So kind of trading in between support and resistance levels automatically.
Can you show me your portfolio? with that?
So actually now we're transitioning, Rosie is transitioning to V2. So all the portfolios, all the track records are being transitioned. So I cannot show you at this very moment. However, within a few days, we will publish an article on here on Rosie Whale, showing the portfolios and all their track record, what happened within the last month. So I recommend everybody to really come to the Medium article to see, all the posts Rosie Whale tries to publish at least once a month.
How big
the results.
How big results it done for you?
So let's say the goal of in the last 6 months was to protect users' capital, right? And that's what happened, right? You have a capital protection and you don't have a capital, users don't experience a capital loss. So for example, there were very good months like June, it was plus 7%, and there were worse months like August that the users went minus 4%. But however, very, very important is that users don't bleed and they don't lose capital, right?
But for example, I put, for example, 100,000 in this bot in last 6 months, and after 6 months,
so
how much I have?
If you bought it about 6 months ago, considering all those crashes that we had, you will have about the same amount of money, right? So Rosie will do trades in a way that you won't lose the capital if we're talking about the last 6 months. So bear market for Rosie is real to protect users' capital, right? They're not trying, it's spot, right? It's not leverage, it's not shorting, right? It's a spot trading. So during bearish phases, Rosie protects capital, and in bullish phases, it explodes and makes you huge gains, right?
Right.
So
and I have also a question. And do you or a team of Rosie Whale is changing the algorithm according to the kind of market we have right now? For example, there is a bear market, bull market. So probably algorithm will be slightly different during different type of cycles.
And that's a good question, actually. And the answer is that no. So there is one algorithm that is the main strategy called GAP, and it's not being changed, right? So it's a mathematical formula that doesn't include technical indicators. It's pure mathematical, and you don't have to adjust it for that sake, right? Now, that being said, it's very safe. Now, if it's working as it's working right now during bearish and bullish phases, you essentially don't have to change anything. Now, Rosie is a product that was developed within the last few years, and it's a complete solution that is ready to be used by everybody. And it doesn't have to be adjusted. However, users from the new version will be able to put some add-ons. They will be able to add some aggressive moves onto the strategy, right? Because many people, even in the bear market, right, they want to take risks. They want to I would like to invest more. Rosie is investing too less for me. So up until now, that was not possible. But from the next version, people will be able to kind of do some enable some add-ons and allow users to get more exposure to the market and take higher risks. To basically, higher risk, higher reward, and higher potential loss. So
right, interesting. Interesting.
Yeah, that's essentially what I'm doing, right? I mean, about 70%
how you created the algorithm? I mean, did you do this by your own, or there is a staff behind this? Some people, I mean, what kind of people create the algorithm? IT guys or math guys?
Yeah, so that's a good question. No, so it's not me who created the algorithm. That's actually team member. His name is Tim, and he's really the brains behind the whole strategy, right? And he's a mathematician, and he's the one who basically created this kind of algorithm that we have right now. And we started working together like in 2018, 2017. We saw this volatility in the crypto market, and we're saying, how do we make use of it, right? And he used his brains basically to really come up with something that we're very proud of, and that's making money for the people, for the users, which is the most important thing.
Right. So one last question, right? Sure. How many trades, for example, a month or a week it's doing?
That really depends on the portfolio. So if you consider a portfolio of about 1,000, a small portfolio, 1 to 2,000 USDT, you will not have a lot of trades. You'll probably have maybe 1, 2, 3 trades per hour, something like that. So it's still kind of a considerable amount of trades, but not too many of them. Now, if you have a portfolio of 100,000, you will most probably have hundreds of trades per day. Yep, definitely. Gonna have
hundreds of trades per day, but not in the whole capital.
Yeah, definitely not. Definitely not. So maximum it can invest up to 66% of your capital. Now, and the add-ons that I mentioned before, they can really make this strategy even more aggressive and then take, let's say, up to 99% of the capital. But the safe strategy takes up to 66% of your whole capital.
Okay, so around 60 transactions per day. It's a lot. And how many of them are? So around half of that is buy transactions and half of that is sell transactions.
Well, you can say sometimes more buy, more sell, but more or less, yeah, let's say around 50%, correct.
Okay, so for example, if I have lowest capital, for example, $100.
So it's not possible. The minimum is at the moment 1,000 USDT.
1,000. So $1,000.
Yeah.
So 1,000. So there will be around few transactions per day. Yeah.
Correct. Yeah.
What I'm trying to guess, what I'm trying to calculate, is the fee, because the exchange is taking some fee, and you are taking a fee.
Sure.
So, for example, if you trade, for example, if you take my $1,000 and you trade, for example, take $10 and $10 and $10, so the fee is really low. But if you will take, for example, the whole 1,000, let's assume that you are taking the whole 1,000 and you are doing 3 trades a day, and this is 0.1 for exchange and 0.2 for you, so 0.3. So around 1% real cost a day. So that's why I'm asking how.
Yeah, and that's you're very smart speaking about this for sure. So now definitely we calculated everything that user makes real profit after paying the fee. Definitely, right? So if we take Rosy Whale, right, and if we take the results over the long term, actually I could even show some forward testing results that the Rosy Whale has in the last year. So you always in the long term, you always in the profit, right? You can definitely have some phases where your capital, let's say for example as here, right, where you are decreased. Oh, sorry, I cannot somewhere, right? So you have small time frames where you may be down with your capital because the market is going to get down because you're getting the coins for cheap, but after some time you're always going into profit because the strategy in 95, I would say, cases sells for a profit. 95% of the trades are for profit, and for higher profit than the fee you pay, for sure.
All right, cool, and great to know how it works. And I really hope to see the results, and when you show the results as you told us.
Definitely. So now really it's the moving from V1 to V2 because there's a totally new version which is being launched, and that's why the track records are not yet amended. And once we amend the track records, you will be able to see the statistics and the rest of the information. And yeah, so that's essentially what I recommend to users. Users should be able to try different tools. Just try different tools, try different bots, and find something that fits your style. Because I believe that none of us, right, wants to spend the whole day trading. I mean, if you're a trader by profession, if you do it for 8, 9, 10 hours a day, that's fine, right? But again, it's not the most fun thing to do, right? You sometimes go into your emotions and so on. And if you find algorithm that can have, that can make you income, make you profit after paying the fee, then you're fine on your own, right?
All right, so I will do it. I will check Rosy Whale Volume 2, and of course, everybody are invited to do their own research just before taking any kind of advice from me and from you.
Exactly.
Any kind of advice.
Everybody should test for themselves, decide for themselves if they want to use it. It's something for them or not. We can present the tools that we use, we present the tools that we like, but essentially it's up to the people to really.
I see that you have a token. I see you have a token, Rosy token. Right here.
Oh yeah, the Rosy token will be launched also next year. So at the moment it's not live, it's being developed. Right. Yes, but it will be part of the ecosystem as well.
We'll be able to pay the fees probably with Rosy token.
So part of the fees, right? We're currently creating this infrastructure and how the Rosy token will be used in the system. But definitely for the holders, it will provide more features, right? So for example, if you would like to hedge your position, right? Because you're trading spot, right? So if the market is going down, you're averaging down the prices, you're not making profit, right? So you want to hedge it, right? You want to short. So all those nitty-gritty details and some add-ons, they will only be available for Rosy token holders. So if you want to get the maximum experience of Rosy Whale, then yes, you want to have a Rosy token in your portfolio.
All right. So We are talking over 1 hour probably right now.
Oh, that's quite a lot. That's always good to talk to you, Julian. You know, I always learn a lot. You always show me something interesting, and it's yeah, it's cool to talk to you.
Yeah, let's do it. Let's talk in another week about
Sure.
the crypto and about the.
Let's see what the market is going to move in the next few weeks, right? And now Christmas time is coming. Let's see how the market responds to that.
Yeah, let's do it. Let's talk soon. So see you next week.
All right, man. See ya. Ciao, ciao.
Ciao, ciao.